Senators open their mouths and get pwned. Brandon Gentile here. Blind and ignorant our leaders operate. What's new? What is new? The story of life, the story of politicians, the story of globalists, the story of centralists. I hate to say the word elite because they're not elite. Unfortunately, they're really not elite in anything. They're not elite in anything except raising money and siphoning off the backs of all of us and our hard work. Again, this is a story of time. 3 U.S. senators recently sent a letter to Fidelity Investments in what was one of the more embarrassing stunts I've seen in a while, even for politicians. How can anyone believe or take any of these leaders seriously on any topic? How can the entire Congress continually rack up single-digit or approval ratings in the teens, and the majority of them continue to be reelected year after year? But I digress. The Three Stooges, gleefully backed by the little guy, backing the little guy, by finger-wagging Fidelity, relaying how the little guy isn't smart enough to know what to invest in. Don't you know the little guy only has average of 401k balance of $129,000 and median balance for 401k accounts is $33,000? Mind-blowing in and of itself. Truly mind-blowing. Politicians, who, mind you, most have never held a real job or owned a real business, are going to tell you why you should not be able to invest in the best asymmetric trade of our lifetimes and why they are looking out for you while, mind you, Nancy Pelosi drives her limos to the airport, flies in private jets over to Taiwan to see how our semiconductor bets are going. And we're getting 10% for the big guy over here. We're not going to mention any more names, but this is the insanity going on in the political world. And this is why the cycles as old as time, the French Revolution, Occupy Wall Street, all these revolutions continually happen because politicians don't learn lessons from history. As Jim Rogers says, one of the greatest lessons of history is that most people don't learn the lessons of history. Unbelievable. You have to read Jim's books. He has amazing, amazing books, one of the best investors out there. This, just to remind everyone, a dollar performance compared to Bitcoin over the last 12, 13 years since it was introduced to the world and dropped on all of us. And again, this is, this could be the 401k chart against Bitcoin. Same thing, because 401ks are denominated in dollars. Just destroyed, absolutely clocked. That's one of the ugliest charts I've ever seen in my life. That, mind you, is what 401ks or the dollar has looked like in the last 12, 13 years against Bitcoin. If you held Bitcoin, your life is infinitely cheaper. Everything in your life is infinitely cheaper. And that's what will happen and continue to happen over time. Again, this is not a tulip bubble, guys. This is not, people think, oh, I've missed the boat. Please heed this. We still have 100, 200, 500,000 plus X to go on Bitcoin in the coming decades. This is going to suck. It's a monetary black hole. It's going to suck in the monetary premium from every asset going forward as time goes on. Art, real estate, you name it, gold, silver, insurance, bonds, everything going to get sucked in over time into the human's best, most pristine collateral and monetary asset we've ever had. This is new gold. This is the newest thing that's beyond, it's the apex predator. This is so important. Again, we're going to talk this week about the math equations of solving the entitlement crisis, the Social Security, your 401k, and do some of the math and actually what it would look like to just hedge and put a little bit, 1%, 5%, maybe 10% of your portfolio, not 100%, not 50%, not 30%, not 20%, not 15, maybe 10. I would suggest at least 10, but 5, 1%, and what it can do over time. And again, we always say the price is the least interesting thing of Bitcoin. The freedom it will allow people to do, and the ability, and the merit that will happen in business, and being able to make money because of a society built on code and law and built on fair, equal playing ground, equal rules. What we all want, what so many people in life talk about now is fairness, fairness, equal, equal. Bitcoin is that. Bitcoin is all those characteristics. It is not equal outcomes. It's equal playing rules. It's equal fairness in the game itself. It's not equal outcomes because everyone's going to work harder or they're going to do more or do less, and everyone's got their different prerogative. But Bitcoin gives that level playing field so that you can go create. You can go save capital and it'll appreciate over time. Like we used to have when you were on gold standard 50 plus years ago and beyond, when you could just save and make 15% on your capital. That is what Bitcoin is. This is what this chart is showing. And this will happen going forward. But like I said, The price is great. People, as they say in Bitcoin, come for the price and they stay for the freedom. That's what it did to me. Getting into it, started buying it 4 years ago. 4 or 5 years ago, I believe it 4+ years ago, and it was a more of a speculation. I didn't know what I didn't know, and then as I got into it over the next 2 years in 2018, 2019, and into 2020, I realized, oh my goodness, this is everything I've ever hoped for in politics, in humanity, in life, and equaling things out, and galvanizing everyone. It's really the Constitution, the Bill of Rights 2.0. It is the new documents that people coalesce around, that love freedom, that love the ability to create and to go do without having to worry about the hamster wheel and trying what were my utility bill this month or what was going on this month, because I can't pay my bills because I'm on an inflationary hamster wheel where the governments are printing currency and it's just leaking value out of the economic container that we talk about. That's all a monetary asset is. It is a container for your economic energy, your time, and it just leaks out in fiat currencies. It leaks out every day. So you have to get back on that hamster wheel the next day and run and run and run to pay the bills. Once you have sound currency, if you have, we used to have gold, right? But if we have Bitcoin, it mathematically, as governments print more currency, it mathematically makes Bitcoin go up over time. NGU, number go up technology, because it is a finite 21 million Bitcoin or 2.1 quadrillion Satoshis, never be more. So everyone in the world is going to fight over those Satoshis. Every single person. They're going to fight over those. That's why the price will continue going up. Isn't the definition of insanity doing the same thing over and over again and looking for a different result? Truly, why would I keep throwing my cash into a 401k when it came out 50 years ago and the average person only has $130,000, or I should say the average balance is 130 grand and the median is 33 grand? Why keep doing the same thing over and over again? Again, since the 70s, 50 years ago, ERISA came out to provide a vehicle for the poor and the middle class to retire. All it's accomplished is siphoning fees to Wall Street and lining those senators, Smith, Durbin, Elizabeth Warren, and all the rest of them, lining all their pockets, all their donors, the lobbyists, etc. Not only does the average American have literally a couple of years of cash to retire on, but the entire Social Security, Medicare, and Medicaid programs are all scheduled to be insolvent in the next decade. So not only do people not even have enough to save in there, and the dollar keeps depreciating in value, so what's the point? But they're going to be insolvent. The entire program is going to be insolvent. And here is the representation from the CBO themselves, Congressional Budget Office from 2 years ago. This is a projection. And by all means, senators, tell us how brilliant you are. Please enlighten us. And this is, people get worried. Am I going to get paid out with my Social Security, or am I going to get paid out with my Medicare? You're going to get paid out, but they're going to print currency to do it because it's insolvent, meaning the price of everything continues to go up of your daily goods. So your eggs are now $5 a carton or 10, or your milk instead of being $1. And that's how they're going to pay you back. You're going to get your Social Security. You're going to get your Medicare and Medicaid. It's just going to come at a cost that, unfortunately, most people don't see. It's going to come at an inflationary cost of massive currency printing and massive, massive gains in all the prices of the goods, of perishable and non-perishable goods. It just is. Again, let's break this down piece by piece and go through this letter. Let's end this nonsense and destruction of people and their wealth once and for all. And you can see the original article. You can click here in the blog to go to the actual article on, I believe it's on Dick Durbin's website, something.gov, and I'm sure it's on the other ones too. To Abigail Johnson, CEO of Fidelity. Miss Johnson, July 26, 2022. I'm going to go through each paragraph and then I'll tell you my thoughts on each one. We write to you today as Fidelity, a trusted name in the retirement industry. Why? Why would you allow plan sponsors the ability to offer plan participants exposure to Bitcoin? While plan sponsors ultimately are responsible for choosing the investments available to participants, it seems ill-advised for one of the leading names in the world of finance to endorse this use of such volatile, illiquid, and speculative asset in 401k plans, which are supposed to be retirement savings vehicles defined by consistent contributions and steady returns over time. So again, this first highlighted one really doesn't seem like you're letting people choose if you're telling Fidelity what to do. So they admit that, well, people should choose what to do on their own, but we're not going to. I mean, classic government. I mean, this will be less volatile, and the depreciating dollar, which that does not say depreciating, wow, and the depreciating dollar in the handful of years, in the coming years, is going to depreciate every single year. And Bitcoin, as the price goes up, more people jump in, will be less volatile. That's the price you also pay for massive gains, is volatility. But also, don't sell. Don't sell Bitcoin and lock in losses. People are worried about trading and day trading and all this stuff and swing trading, and they lock in losses. They're trying to like time markets. That's when you lose. Get into trends early on and ride them out for years, 10 plus years. This is retirement. It's just like they said, so retirement savings. This is what Bitcoin is. It's retirement. It's a savings technology. It's an unconfiscatable savings technology. And again, they're supposed to be retirement saving vehicles. Of course, steady returns over time. You mean like dollar cost averaging Bitcoin, consistently saving in the hardest monetary asset known to man ever that we just talked about earlier? We didn't talk about this. Or is it like saving dollars? Should we save dollars, which have lost 95% of their purchasing power in the last 100 years? You tell me. You guys are so brilliant. You guys have shown us right here in this next paragraph what the average balances are. 130 grand average balance and 33 medium. But you're going to tell me we need to stay in the dollar, right? Because it's good for you. That's not good for me. That's not good for us. It's good for you. As one of the largest 401k providers, Fidelity must be aware of the precarious position of Americans' retirement savings. Oh, while the average 401k balance is 130 grand, the median balance is 33 grand. With Americans living longer today than ever before, it is apparent that too many retirees are likely to outlast their balances during their golden years. Huh. Insane to think that it's all the insane to think that's all the 401k has done for people in nearly 50 years. Why would we keep doing the same thing? And how insanely sad is that? That program, again, has done nothing. Those fortunate enough to have access to a retirement plan may be unable to find space within their household budget to contribute to an employer-sponsored plan and feel that their wages would be better directed to household essentials such as housing costs, childcare, or food or transportation. Well, why is that? Some workers, especially younger workers just entering the workforce, might not see the value of participating in an employer-sponsored plan. They probably would actually rather be in Bitcoin. Interesting, because they see that the old system doesn't work. Weird how that works. They might not see the value of being in that or consider a retirement problem worth addressing later in their life. The above issues are legitimate, complex problems within our retirement system. This begs the question, when saving for retirement is already a challenge to so many Americans, why would Fidelity allow those who can save to be exposed to an untested, highly volatile asset like Bitcoin? Yet you guys, politicians keep spending like crazy. Inflation Reduction Act, anyone? We're going to reduce inflation by spending more money, and keeps driving those costs further out of control and further out of the reach of the average person. They feel like they can't afford to invest in their future, which is precisely why you are here saying they would rather spend on childcare, transportation, food, and housing costs, because they can't afford to invest. You're literally admitting the problem, like paragraph after paragraph. You're outing yourself over and over again. You don't see it. It's just like the Federal Reserve in a video and blog we did recently saying, hey, look at eggs priced in Bitcoin last year, and it looks volatile. But when you zoom out, it's gone to absolute zero. Actually, we have it right here. Ironically, here it is. We've got eggs priced in Bitcoin, or eggs priced in the dollar. Look, super volatile. Eggs priced in the dollar. Oh, eggs priced in Bitcoin looks kind of volatile though, doesn't it, guys? Oh boy, wow, you're really losing. No way, let's zoom out to 2015. Oh, that's right. You could buy the entire farm if you wanted to, if you would have been holding Bitcoin. So again, don't let these people lie to you. But again, sports gambling, casinos, lottery, they're all totally fine with that. The government to spend their cash on. The government's totally fine with you doing that, but heaven forbid, you're going to go and put some money into Bitcoin. While the underlying technology of blockchain shows promise and has the potential, again, these are the senators, to be used for innovative and existing applications, consumers must be wary of risks associated with Bitcoin and other digital assets. What appears to be certain is many are unaware of the potential risk and dangers, financial dangers posed by digital assets like Bitcoin. My response, again, did you even take the 30 minutes to read each of these white papers or these reports that Fidelity has done themselves and their team researching this for years? And they have espoused their views on Bitcoin and the belief why they have Bitcoin and why it is that they're going to offer, and why it is the apex predator asset. Here's three of them right here. Senators, you guys can go to these three. You can check those out, and it's going to give you exactly what Fidelity thinks and all the reasons and evidence and charts and proof to do so, which you've shared many times before in here. Again, the senators, they continue. For a while, many consumers had reason to believe they were on sound footing in choosing to pour their hard-earned dollars into Bitcoin, an entire ecosystem ranging from self-described cryptocurrency investment experts on social media to highly paid actors and celebrities. That's crypto. That is not Bitcoin. And even some Washington lawmakers have led many to believe that investing in Bitcoin and other digital assets is a sound investment strategy that would pay off handsomely down the line. Someone even aspired to call Bitcoin an inflation hedge. Ha ha ha! That would prove a useful investment tool during high times of inflation. Those suckers. When Bitcoin topped out at 68 grand in November 2021, many of those proponents sounded prescient. Wow, they're geniuses, aren't they? But look, we got them now. Today, Bitcoin stands at $21,000, more than 2/3 off its peak. And again, it's at $24,000 now. This was from a couple weeks ago. And again, my response, and no, there are no paid celebrities for Bitcoin, senators, no CEO, no marketing team, not like all the ETFs and all the companies out there and the S&P 500 and all the altcoins, all the scams. Bitcoin is unlike anything else, which here, Bitcoin First by Fidelity is a 30-page paper explaining just that. Bitcoin should be looked at completely on its own, aside from all the different assets. Apart, I should say, apart from all the other assets, especially all the other cryptos out there and all the altcoins. It's a very different asset. No marketing team, no gimmicks, no C-suite in Bitcoin, no board, no owner, no chairman, no corporate execs, no share buybacks, no bailouts, no paid influencers, just people that all coalesce around freedom, code, rule of law, immutability, uncensorability, and private property. Something you know little, and I mean little, about. You must not have seen this video that I made about Bitcoin destroying inflation and every other asset known to man in the last few years. So, senators, do yourselves a favor, go check this video out. It's a wonderful video going through exactly what Bitcoin has done to that inflation store of value narrative over the last 13, 14 years. I think you'd find it very enjoyable. While we appreciate Fidelity's efforts, again, the senators continue here, while we appreciate Fidelity's efforts to help working Americans realize a more secure retirement, this decision is immensely troubling. Perhaps most troubling is that pointing to the risk of investing in Bitcoin on its website and planning to cap plans participants' Bitcoin exposure to 20%. Fidelity is acknowledging is well aware of the dangers associated with investing in Bitcoin and digital assets, yet it's deciding to move ahead anyway. Well, I'll explain, Senator. There's literally a danger to getting in your car each day, but yet you do it. There's a danger to walking across the sidewalk. There's a danger to going and playing the lottery and spending all your money there. There's a danger to going to sleep each night. There's a danger to doing anything in life. Everything's a choice. There's a danger in holding dollars and just sitting there as inflation destroys your purchasing power by 20% each year. Just holding the bank, doing nothing is a choice. Not making a choice is a choice. There are many ways, again, the senators continue, there are many ways that Americans can invest in Bitcoin in the cryptocurrency casino, but it seems as though this latest effort, though it was supposed to be a retirement nest egg, is a bridge too far. Retirement accounts must be held to a higher standard, one that only limits you to about $100,000 a year, apparently, and one that Bitcoin and other unregulated digital assets fail to meet. This asset class is unwieldy, immensely complex, unregulated, and highly volatile. Working families' retirement accounts are no place to experiment with unregulated asset classes and have yet to demonstrate their value over time. But yep, totally cool to invest in ETFs, penny stocks, casino exchanges like Coinbase, and people sucking fees away from you, dwindling your portfolio for decades. Wait, what? Sorry, I blacked out for a second. I mean, what are we talking about here? This is just the most rambling nonsense I've ever seen in my life. Thank you for your consideration. It's an important issue. We look forward to working with you. Dick Durbin, Elizabeth Warren, and Tina Smith. Wow, that was beautiful stuff, guys. Senators getting pwned. Remember, as Jim Rohn says, if you rely on yourself for your retirement, you can multiply it by 5 at the end of your life. If you rely on government, however, you can divide by 5. This will go down in history as one of the top 10 dumbest letters of all time. I actually printed this out and put it in my journal so that I can remember of political leaders' incompetence every single day. Think differently. Think about the 3 sides of the coin, being on the edge and seeing both sides. Try to check our assumptions. We do know that if we do nothing, then nothing will change. Stay strong. Please stay strong. If you got something out of this, please share it. Please like it. Please subscribe. If you don't like it, please dislike. Please comment. Please let us know what we can change, what we can help. Please share with somebody who might dislike it, who you might want to tick off. I would appreciate it. I will fight battles for you. And again, with this week, we will go through and talk about going through Social Security, going through some of the different funds, retirement, and how little hedges, little investments, asymmetric bets can play off big time and save all of this. So I appreciate you. Please go check out our inflation video and the store of value argument for Bitcoin and what that actually has done for people if they would have owned Bitcoin in the last 12, 14 years. And we have many about deflation and how deflation is the key to the future, not inflation. It's everything you're not being told, how to measure your wealth, and how to and then just other inflation videos in general. And again, I think this is one of the more important ones. Again, what is Bitcoin, and is it a store of value or inflation hedge? So we appreciate you. Most important asset we have, is time, talking about assets. So thank you for spending it with us. Thank you for helping us expose people who have no idea what they're talking about. And I truly look forward to seeing you on the next one.